Ross, welcome back to the show. It's great to have you here.
Yeah, thanks for having me. It's funny you brought this up. Just in full disclosure, I am actually an investor in Altruist and very close with the company. And they were in my office on Monday morning talking about their new tools because we're working very closely together to build a new platform for investment advisors. Because it is true, what they're doing is very disruptive and super cool. So they roll out this tax planning software. They're like, oh, this is brand new. We're just rolling it out right now. And, if you would have told me all these stocks would have gone down so much, I probably would have sold some of them. But how do I say this? It's so overblown, the selling over a tool. As much as I like the tool too, it's cool, but it's not like some sort of game changer. I think it just represents that somebody in my industry is actually trying to do something super innovative, and they're building tech, their whole tech stack from the bottom up, which is why these legacy companies are a little bit scared because, they kind of build on top of systems that have been around for maybe 20, 30 years. Some of them, like Schwab, has been around for so long. But the fact of the matter is companies like mine use all the custodians, and clients are on these platforms, and it's not so easy to move clients. And Altruist is a brand new company and they're still building. We work with them every week on building technology that will make advisors' lives amazing. And I'm super happy that they're a partner of ours, but it's also like they're building and it's going to take time. And while everybody's in panic mode, and I think your previous guest said it, what this looks like in 5 years, I'm not sure. I know it'll be super awesome, but there's a lot of building that needs to be done before any of these systems actually work and scale.
Well, so let me ask you this. How do you think the structure of the wealth management sector changes in the next 5 years with these tools? I mean, there's a big question around what the tools will be able to do, which
Right.
tool ultimately will prevail. I'm sure you have Schwab that's working on similar tools in the background, Raymond James. I mean, they all have huge teams, and I think it doesn't really matter who comes first because they're all going to have their own version of the tool. But
Mhm.
how do you
Right.
think the structure of the advisor client relationship changes over time? And this must be top of mind for you.
Well, we're the leader in this. I mean, so that's what Gerber Kawasaki is the future of wealth planning. Our actual like slogan is a new generation of financial advisors. And now I would say that we're AI enabled advisors because we've already integrated AI, mostly right now, Claude into our system. I use chat too, but Claude has been phenomenal in running proposals, doing comparison and analysis. So there's definitely a truth that if you're very adept at AI, your efficiency and productivity in wealth management will increase. I'm getting calls every day from investment firms wanting to invest in my firm because we already have good margins in our industry, and AI is allowing us to completely change the game in being able to service a lot more clients with one advisor. And that's what we've done at GK, where the traditional investment advisor will manage about 100 clients. At GK, we're averaging closer to 400 to 500 clients with the best level of service. And that's the game. We have human service, but AI now helping us behind the scenes. But where we're using it most right now is in analysis proposal tools. It's really good at analysis. So I would say there's no reason for you to study for your CFA. Analysts and analysis is going to change more than any other area, I think. We just can build complete portfolios with AI now. And of course, us humans who've been doing this for 32 years make the adjustments so that, AI doesn't have 32 years of market experience. So just to end this, I met with Google recently and Bloomberg about their AI, opportunities, and I would say that it's going to take a long time for the stock market because there's so much data and there's so much experience that market participants like me have had over 30 plus years. It's really hard for AI to just come in and manage portfolios like we do. But what's happening is making much better for people like me to manage money and scale, and that's what we do at Gerber Kawasaki.
Got it. So and so just to put a button on it, AI is not doing the managing, as it's not going to do the decision making
Look,
at the end of the day.
when you think about the future, let's say we're investing in AI stocks, right? So I asked AI, like, what are the best stocks? And not that simply, but and it does phenomenal analysis. It really does. But it doesn't change that I'm going to go through there, because we were saying it doesn't really recognize like ridiculous PE ratios. And as much as Palantir is this stock that everybody thinks is great for AI, it also trades at a valuation that at my firm, we just can't buy it. It's just too expensive. And so we were saying we have to put in more parameters. We have to build the algorithm better, and we're doing that, but it doesn't change idea generation. And we sit around in rooms and we try to generate new ideas. We shoot down 99% of them, but that's a human element of management of money. The way we manage money is very human, but what it does is being able to manage this money now is much better and more precise. And things like automatic task loss harvesting, these tax tools like what Altruist announced, portfolio rebalancing software, our ability to really customize every portfolio for each client. We have tons of models here. So you're getting a customized portfolio. It's not just like one general portfolio like Betterment at our firm, but now we're using AI to build these things for clients and manage it in scale. So
Right.
it's really awesome. I'm couldn't be more excited about what's happening in my business and in our technology, and also how many young people we're trying to convince to stop betting their money and invest it in AI stocks.
Let's
What the hell is
let's
wrong with
talk.
these young people?
Let's talk about it. So you put out a tweet today,
Yeah.
this morning, about prediction markets.
Ah,
And but the first question I have for you, Ross, is: are your clients coming to you and asking you for exposure to prediction markets?
absolutely not. My clients are so much smarter than this. You remember, people come to Gerber Kawasaki to make money, not to bet money. Okay. It's a whole nother game when you're a bettor. I am not a bettor, to be honest. I am not a bettor. I am an investor. I invest in companies that produce dividends and profits. And I'm a Warren Buffett style analyst, I would say. I want fundamentally great businesses. So Polymarket and Kalshi have basically usurped state gambling laws. I've been involved in the gambling industry since I started investing in stocks like Mirage and MGM. And then we went into, these online gambling companies, and we still own some position in Genius Sports, which provides data to the gambling companies, which is super cheap now because of this nonsense. But when you actually think about why would these companies be allowed to bet in states like California that do not allow sports betting, and all of a sudden the federal government just usurps state laws? This is not going to hold up in court, and we're pretty sure of that. So we expect this to stop, but young people are really fascinated with betting because they think it's a faster way to accumulate money, but it's actually a faster way to go out of money. Okay. And so, I learned this originally from Steve Wynn, the guy who started the Mirage Resorts and built one of the great gambling empires. And he said, you always want to be the house. And I've been the house my entire career. And I can tell you, you're much better off being the house than the gambler. Okay. And that's just life. That's just life. If you gamble, you're going to end up broke. If you invest, you're going to end up rich. So, dump your Kalshi and your Polymarket and give us a call.
So, just going back to the technology piece of all this, look, there's a lot of regulatory challenges around this. I think there are more questions coming. We obviously have the insider trading question
Right.
that is up there. But if we focus on the technology, is there any part of the technology here that you think actually is a broader trend that will continue here, whether or not it's Kalshi or Polymarket?
You mean like figuring out probabilities to random?
Yeah, I mean, look, we had this with when
I picked
crypto.
the Super Bowl, right? I did bet on the Super Bowl, and I do that every year, and I won again. But like, what technology have they innovated?
I'm asking.
They innovated nothing. They literally innovated breaking the law. That's what they innovated, is that they figured out that they could use the commodities exchange to gamble in California. So they took more money on the Super Bowl betting, Polymarket and Kalshi, than any of the gambling apps, and you're like, so these apps, 95% of their revenue is sports betting now. So or more. It's like 99% of their revenue. So they've just become nationalized sports betting apps, but we live in the United States of America. So there's states' rights that supersede federal government rights. And in this case, it's so obvious. And when the Supreme Court eliminated Roe versus Wade, they reaffirmed that states' rights supersede federal rights. This rigged court. And so it's going to be real hard to go back and say, oh no, the federal government should allow people to gamble, especially because gambling is fundamentally like not great for people. Oh, anywhere in the country, no matter what a state has voted. And not to mention Indian tribal pacts like here in California are being violated, and they're considered like sovereign nations. So, it's now running through Nevada, which has one of the toughest gambling commissions out there. And Kalshi is just flaunting the law, and it's going to come back. We've seen this with crypto companies. We've seen this with other areas, pornography. This is gambling, and quite frankly, gambling's not good for people in general, and so there should be regulation by the states, and that's why it exists.
Let me ask you a quick question about XAI, which is a company that you and I have talked about on this
Yeah,
show before. XAI, now SpaceX, okay,
right.
and I know
I'm a SpaceX
you
shareholder.
are a
Yeah,
SpaceX investor. So
thank God.
we've had some exits this week,
Right.
and this week, last week. I mean, they keep exiting, okay. And there's 12 co-founders, depending on how you slice it. Six or seven, five or six of them, I think, have left. What any part of this concerns you? Is this business as usual for the Musk empire? What are your thoughts on this?
I've been concerned about Elon and his behavior for years, my friend. Like, this guy is a disaster, and now he's all over the Epstein files. Like, it's really, I'm driving a Cybertruck still, and honestly, like, and I don't care what people think about me, or if they want to equate me to Elon, that's on them. I want to drive an EV, but it's getting harder and harder to just justify in my own soul having anything to do with these people. The Musk family, it's not just Elon, was clearly involved with Epstein. And I don't really care if it's a couple emails or we had one dinner and the lies around he's like the worst person that's been around probably since Madoff. And it's just like, it's so horrible, these crimes. And so why would you want to, there's so much opportunity in AI. Why would you want to work for Elon? I get we're going to win, we're the best and all that. So Elon's great at building teams, but you got to look at your leaders and not feel disgust for them. And I think people are just had enough. It's really hard to deal with the dissonance. And even in my head, driving a Tesla, with the way the company has acted and its management. And so, there's a lot of people that made a lot of money in AI. They can go work anywhere they want.
But so why not sell? Why not spell say SpaceX and Tesla then?
Well, that's a great question. When SpaceX goes public, I'll have to ascertain whether or not I'm going to hold those shares. So, if I can get 1.5 billion for them, I might just be a seller. And I own Tesla because I still believe it's the best solution for climate. And maybe, I just have to like finally relieve myself of these shares. But I so believe in an electric future, and that Tesla has led that future in the past. And part of me still has hope that they'll refocus themselves. Maybe I don't know. I don't know how I can hold these shares anymore, to be honest. But I love the opportunity in EVs, and I think Rivian is now finally getting some great product out there, but it's hard to give up, this company. But it's not in my ETF, and we don't recommend it to new clients.
Great. Well, Ross, I want to thank you for coming on. That is Ross Gerber from Gerber Kawasaki here on TITV.